Good afternoon, team. Uwe Jacobs, property strategist from Property Friends, giving you the report for the month or quarter or 6 weeks. We want to time these reports with the RBA updates, hence they're a bit irregular according to the RBA schedule. I trust everybody is well. It's Melbourne Cup Day, so that's always an exciting time in Melbourne. I hope for the people that are in the betting, we do it once a month. I spend a total of $10, yeah, big expense on the cup. I hope you're right. The right horse wins for you, so we are having a bit of fun with that. So what's happening in the property investment industry? Well, I have to say I'm happy as the pig in the proverbial. Our foray into the modular dwellings is continuing. We are testing the whole system under Factory to Key, which is our new company that provides services to the modular industry, with an 8-unit development in Geraldton, and it is going gangbusters. I have to say I'm very happy, and the investors that are with us in that development will be very happy too. The main reasons are that, one, we will put 8 units turnkey finished into that development in less than 3 months. That would normally minimum be a 12 months event and construction time. The second one is we know exactly what we're getting because the buildings are done in a factory controlled environment and get delivered to site, volumetric, i.e. completed, and or get substantially in modules completed on site. So the maximum installation or building period per dwelling is 3 weeks. Now, compare that to normally a 6-month dwelling time for the build for one. Then we are obviously benchmarking the pricing, and certainly in Geraldton and in other places as well, we generally find that we can do it for a lesser price than the market price. So faster, better, cheaper. What's not there to like about that? So we're having a lot of fun with that. That is certainly an area of the building industry that needed to change. We haven't changed our building methodologies for the last 150 years, and that led us to where we are at now in our view, which is not a housing crisis, it's a labor crisis. It just takes too long to put a house together. And Factory to Key, our new company, is tackling that. And we are very successful with that. We have, in the last weeks, submitted a $6.5 million tender, and we're looking good in Tasmania to deliver dwellings to the state of Tasmania. So that's all a lot of fun, and I'm leaving in a week and a half for discussions with the state of Tasmania, which should be good fun. So that's all running smooth and very nicely. Thank you very much. I want to make it fast because I also want to have a look at the race. So let's get to the RBA update. We are sitting on 3.6%, and most of us were hoping, quivering in excitement for another 0.25% reduction, which was in the beginning of the year anticipated. It didn't come. The inflation, the pesky inflation, is continuing to be high, which is why the RBA has decided not to cut the interest rate. So we will remain at 3.6%. So that means mortgage rates of about 5.5% out there, which when the income is good enough is certainly something that we are having a lot of fun with. The developments that we're doing are usually around 5.5%, and with the non-cash deductions, that makes it a positive gear, meaning that the property pays for itself completely, meaning that I can just have it sit there and tick over and wait for the capital gain. Even if the capital gain is not instantaneously, which we, as a matter of strategy, cater for, I can sit on the property and wait for the capital gain to come, which is what most investors gets killed by. They have large negative gears, pay what I call pay the dragon, feed the dragon, have to pay from their after-tax income the negative gear, and that's just not much fun. And other than influencing your lifestyle, the holidays may get shorter or may have to get cancelled, the dinners out, the theater nights may get less because we have less disposable income. So that's not much fun, but also you're investing for hope and a prayer. And that, in my view, is not a good strategy. Anyway, so the RBA has not cut the benchmark rate. We are continuously sitting on 3.6%, which further interest rate cuts, in my view, in my humble opinion, and do your own research, do your own due diligence. This is not a recommendation, will come. No question. The world markets interest is going down, and it will come just as soon as the inflation will be stabilized and will be going down as well. All right. Things are good out there. Property is continuing to rise. The demand is very, very strong and will get stronger with the inflation with the immigration figures. Geez, I'm getting all muddled up. With the immigration numbers of people coming in, and Australia has to grow. So there's good times ahead. And remember what I always say, you got to be in it to win it. If you want to have a chat, book a discovery call on the website. Is a link. Happy to have a chat. We need to look at your personal circumstances because there is not one shoe fits all. We very much, as property friends, tailor the solution to the circumstances of your specific lifestyle, which is what it needs to be, in my view. But I'm not getting on my high horse now. Have a good Cup day. Enjoy the race. Yeah, have a good one. Bye-bye.